Hello everyone. In this video, we'll continue our questions from straight line method and then we will learn about written down value method of the depreciation. Okay. Now, see. Question number 2 we have here is XYZ Limited purchased a machinery on 1st October 2018, okay, at a cost of rupees 1,50,000 and spent 10,000 rupees on its installation. The realizable value or scrap value at the end is of 10 years is estimated at rupees 10,000. It means we got three data. First one is the cost, second is installation expenses, third is useful life, and fourth is the scrap value. Only these four things we require for the straight line method. The books are closed on 31st March every year. Show the machinery account and depreciation account for 3 years. So we will prepare two accounts, machinery account and straight line. According to straight line method, we have to prepare depreciation account. See, I am writing here machinery account, credit, debit. Machinery is of course our asset. We already know this. See, I have explained in detail how to prepare ledger in the journal and ledger series, that is series 2. Okay, so please go and check that also. Now, we have purchased machinery on 1st October, so you can write here to complete the format first. We will write here date, particulars, amount, date, particulars, amount. Now someone might argue that there is a column for journal folio also. You can just prepare a column, that is of no use. Journal folio, we never use journal folio, it is never given in the question. Okay, now we purchased on 1st October, so the date is 1st October 2018 at a cost of 1,50,000. So now see, I would have purchased machinery. When I have purchased machinery, I would have paid cash or I would have paid check. In now question answers, what do we use? We will use bank account only. Okay, we do not use cash. One thing, to make it easy, what we can do, because this is machinery account, it is asset account. So if it is increasing, we debit the asset. If asset is decreasing, we credit the asset. So you can just make these arrows so that it will be very easy for you to pass the journal entries. Now, when you are purchasing the machinery account, the balance will increase. So you will write on the debit side to bank account. Amount is 1,50,000. Because we have purchased machinery increase. Now you spend 10,000 rupees on installation also, so you have to write that also to bank account 10,000 rupees. See, what is the journal entry? Kindly read with me. Okay, machinery account debited to bank when you purchase the machine. When you pay for installation, again machinery account debited to bank. This is how the journal entry is formed through ledger. Okay, then you can pass it here also, the date 1st October 2018. Okay, then they are saying the books are closed on 31st March every year. Okay, so you will write here 31st March 2019. Be very careful. Okay, you will write the closing balance here, but remember, before writing the closing balance, you have to charge the depreciation. We learnt in the previous class. Check, what was the journal entry? Depreciation account debit to fixed asset, then P&L account to depreciation. So I will go back to the depreciation account. What will we write? We will write by depreciation. By depreciation. Now the question is, how much depreciation we are supposed to charge? Now be with me. You can write here. I am showing you the calculation. What is the total cost? 1,60,000. Okay, minus scrap value. How much is the scrap value? It is estimated at 10,000. Minus 10,000. What's the useful life? 10 years divided by 10 years. This will give you depreciation for one particular year. So it will be around 15,000 rupees. Now what will we write? By depreciation account 15,000 rupees. No, don't do this mistake. Why? See, when did we purchase? we purchased on 1st October. So from 1st October to 31st March, for how many months I have used it? I have used it for, count with me, October, November, December, Jan, Feb, March. So total is 6 months we have used. So you will be charging depreciation only for 6 months. It means 15,000 depreciation is per annum. So for 15,000 multiply only for 6 months, 6 by 12. We will do this and we will get amount as 7,500. This is your depreciation for this year. Now, after writing this, I am just erasing it. You can keep the calculation in the ledger itself, there is no problem in that, okay. You can show your calculation in ledger. It is better to show it outside as a working note, okay. When you are writing the answer, you can write your working note. In working note number 1, you can calculate depreciation and show like that. That is a better presentation, okay. Now, then on 31st March, after charging depreciation, we will close the account by balance carried down. How much is balance carried down? See, what is the balance here? This total 1,60,000 minus this depreciation, and that will be your closing balance. So your closing balance will be 160 minus 7, that will be 152,500. So you can write here 1,60,000, 1,60,000. This is your total. Simple enough. Are we forgetting something? Yes, we are forgetting something. See, we cannot say we are forgetting, but I am telling you a method from which you will not forget these entries. See, as soon as you are writing here by depreciation, now go into depreciation account. We will prepare depreciation account here. Depreciation account, credit side, debit side, again the same thing, date, particulars, amount, date, particulars, amount. So see, when we are writing the depreciation here, it is depreciation to fixed asset. So now this amount will come here in the depreciation. See, I am just to tell you, look, this depreciation, see this entry, depreciation account, debit, which is crediting machinery account. So the entry is depreciation to machine. So in depreciation account you will write here by depreciation to machinery account. To machinery account on which date? On 31st March 2019. Simple enough. Why? See, understand this. In machinery you are crediting depreciation, so in depreciation we will debit the machine. This is how the journal entry is passed into the ledger, okay. I am focusing again and again on these ledgers because it is very important to know first how to prepare journal, ledger, okay. So that's why series 2 has been already published on YouTube. You can go and check. Be thorough with journal and ledger. Only then this video will be useful for you. Now, after this, depreciation to machinery account, we will write here 7,500. This is what we learnt in the previous video, that so you will write depreciation to machinery, depreciation to fixed asset. After that, P&L account debit to depreciation. So you will write here on 31st March 2019 by profit and loss account 7,500. Whatever is the expense, depreciation expense, transfer that to P&L account. Simple. Now, again, after that, we will write the opening balance here, which is 1st April 2019, 1st April 2019 to balance BD. How much is the opening balance? This is your opening balance. It will appear here 1,52,500. Now, there was no expenses in this year, so directly you can charge the depreciation. You will write here on 31st March 2019 by depreciation account. How much is the depreciation for one particular year? That was 15,000 rupees. So that's it. Now 31st March 2019 by balance carried down 1,52,500 minus 15,000. When you will do, you will get a figure that is 1,37,500. Again the total will be 152,500, total 152,500. That's it. Again opening balance, we will prepare it for 3 years. Now remember, we have charged depreciation. See, when you write depreciation in the machine account, we call it charging depreciation. Now we will write in the depreciation account. There was no closing balance in that particular year, so you can write here directly again 31st March. What you can do is, you can write the total here. Total for every ledger is compulsory, so I am just writing here. In many books you will not find this total row, that totaling they are doing, but that is okay. Okay, now 31st March next year is 2020. Again to machinery account 15,000. In this you will transfer in the P&L, that will be to machinery, by profit and loss account. That is how much? 15,000. Again same, total 15,000, total 15,000. Simple enough. Depreciation is very simple. Now after this, again the same thing on 1st April 20, you will write the opening balance. How much is the opening balance? 137,500. See, understand one thing, opening balance is changing every year, but depreciation will remain same every year. That is the quality of straight line method. That what does it say? That the depreciation will remain same in all the years, all the useful life. So 31st March it will be 20 year, it will be 21 year by depreciation count 15,000, then by balance carried down 137,500 minus 15,000, it will become 1,22,500. Simple enough. Now you can just write the total 137,500, then 137,500. This is your total. Understood? So again, these are your 3 complete years. Then what you can do to be on safer side, 1,421, you can just write here opening balance to balance BD, that is 122,500. Simple. And for the 3rd year also, we will write the depreciation year 31st March 21 to machinery account 15,000 by P&L account 15,000, 31st March 21. And again we can write here total is 15,000, total is, remember you will write the total only for that particular year. Okay, you will not write the total of the ledger account. No, don't do that mistake. Now this is your straight line method, and this is your entire question, how you will be charging depreciation each and every year in the asset account. Understood? Now after this we have the next question on asset account with gain and loss on sale of asset. Now before that we will learn what is this concept. See, we already covered how we charge the depreciation in straight line method. Now check, these were the 2 journal entries. Third is gain or loss on sale of fixed asset. What is happening? See, when there is a gain or loss, it means what? You purchase fixed asset for say 1 lakh rupees. Okay, now after 3 years, 1 year, 2 year, 3 year, suppose depreciation every year was 10,000, 10,000 and 10,000. Then can you tell me after 3 years what would be the value of my machine? You will say, sir, very simple, the value will be 70,000 rupees. Great. If the value is 70,000 rupees and if I go to the market, there can be three conditions. First is I may sold it for 84,000, I may sell it for 84, or I will be selling it for 70 only, or I may sell it for 65,000. Higher or equal to or lower than the cost. Tell me, if I am selling it at higher price, it is gain on sale. If lower, then it is a loss. And if it can be sold at only 70,000, it means there is no gain, no loss. Very easy. Now understand this. When I tell you that I have purchased machinery, what is the journal entry? You will say, sir, very easy. Bank account. You will say machinery account, debit to bank. When you are purchasing the machinery, simple. Now if I am telling you, you are selling the machinery, what will be the journal entry? Journal entry will be bank account debit to machinery. Simple. Now when there is a gain, we have already learned that incomes must be credited. So what will you write? To gain on sale. Simple. And we have also learned expenses and losses should be debited. So if there is a loss on sale, we will write loss on sale account debited. Simple. So our journal entry will become bank account debit, loss on sale debit to machinery to gain on sale. There will be obviously one case, either there will be loss or there will be gain. There cannot be both. It's obvious. Now sir, what will happen if there is exactly 70,000 we are selling for? That is the case of no gain, no loss. Okay. So in that case, loss will also not appear, gain will also not appear. Understood? Now we will write the journal entry here and then we will do the capsule for that. See, the journal entry will be, you are receiving money, bank account debit, loss on sale account debit, then to fixed asset. If there is gain, to gain on sale account. Simple enough. This is your journal entry. Now we'll solve a question here. Check. A company purchased machinery account of 2 lakh rupees. So I will be writing here the asset name is machinery account. Machinery account, it is your asset. Credit side, debit side, then date, particulars, amount, date, particulars and amount. Now purchased machinery for 2 lakh rupees on April 1st 2018. So I can write here 1st April 2018 to bank account 2 lakh rupees. The machinery is depreciated at 10% per annum of cost. It means what is the cost? Cost is 2 lakh. 10% means multiply 10 by 100. When you will solve this, you will get 20,000. So 20,000 rupees is your depreciation every year. Now they are saying on 1st October 2020. Please focus on the dates. We purchased in the year 2018. We are selling on 1st October 2020. The machine was sold for 1,20,000. Draw the machine account. So first we have to charge the depreciation for 2 years. We have to reach till 1st October. No. Then only we will be finding what is the value of my asset. Why we are supposed to find the value of asset? Only then we will know that whether I am selling the machine at higher price or lower price. Okay. Now I will write here 31st March of 2019. I will charge the depreciation. Depreciation for one particular year is 20,000. Then 31st March 2019 by balance carried down, that is 1,80,000. Simple. So your total will be 2 lakhs. Here also total will be 2 lakhs. Then write the opening balance 1419 to balance brought down 1,80,000. Again 31st March 20 by depreciation account 20,000. 31st March 20 by balance carried down 1,60,000. Simple. Total is 1,80,000. Here also total is 1,80,000. Now the drama is in the next year. See, you will write here opening balance 1420 to balance brought down how much? 1,60,000. Okay. Now you cannot say that 31st March 21 entire depreciation. Why? Because we are selling our machinery on 1st October. It means on 1st October 2020 you will sell your machinery. Now tell me, you will be charging depreciation. So you can say that on 1st October the machine will be sold. Till 1st October you can charge your depreciation. So you will write here by depreciation for 6 months. So now see, the depreciation for one particular is 20,000. So if I tell you I want to know only depreciation for 6 months, 20,000 multiply 6 by 12. Which are these 6 months? These 6 months are those for which we have used the machinery. So they are April, May, June, July, August, September. Okay. Now 6 months, it means it will be 10,000 rupees. Simple. After that, on 1st October, another thing happened was we sold the machine. Now if we are selling the machine, then what will we say? 1st October 2020 by bank. Machinery is going, money is coming in by bank account. For what price you have sold? You have sold for, check, 1,20,000 rupees. Okay. So you will write here by bank account 1,20,000 rupees. Simple, very easy till now. Now what we are supposed to calculate? Check. Now is the thing we have to learn here. How to calculate gain or loss on sale of asset. Understand. What is the cost is already given, depreciation is also given. Check. Cost is given 1,60,000. The last year's cost here 1,60,000. After that we have charged the depreciation. Then what will you do? You will write here cost of asset 1,60,000 less depreciation. Remember one thing which is very very important, that is you will take cost and depreciation only of this particular year in which we have sold our asset. Okay, the previous year cost, previous year depreciation, you will forget everything for the straight line method. Remember this. Now so you can say less depreciation is how much? 10,000. So now the cost became 1,50,000. Simple enough. Now they are saying selling price is 1,20,000. Now from this 1,20,000, the cost of the machine was 1,50,000 less cost of machine. 120 minus 150, that is negative 30,000. It means it is your loss on sale of machinery. Understood? Simple enough. See, if the cost itself is 1,50,000 and I am selling that machine for 1,20,000, obviously I will face the loss. So loss is 30,000. So you will write here on 1st October 20 by loss on sale of machinery account. How much? 30,000. Simple enough. Now if you can see carefully, it was 1,60,000 here. It is become 1,60,000 because the machine has been sold. Therefore the total will not appear only, or you can say the total will be nil. There will not be any balance carried down also. Why? Because the machine itself is sold. How can there be any balance carried down? There cannot be any closing balance. Therefore, balance carried down will also not appear. Remember these steps to calculate gain and loss on sale of asset. How will we do this? I am explaining again. First, you will take the cost of asset less depreciation, which will give you the cost which we have to compare with the selling price. Now, this cost you will compare with your selling price, and if it is in negative, it is loss. If it is in positive, then it is gain. Now, after this, we will be learning about the next topic we have here is provision for depreciation account. Now, what does it say? Check. What is happening? See very carefully. Understand, very important topic, very realistic one. See what is happening. We have been learning concept number 4, method of charging depreciation. No? Okay. Now, provision for depreciation. I will show you two point of view of charging the depreciation. Okay, please focus. See, suppose there is a machinery, we purchased it for say 1 lakh rupees. So in my balance sheet I will write machinery rupees 1 lakh is there, less depreciation we are calculating every year. Depreciation was 10,000. So the cost at the end of the year, the machinery will represent amount of 90,000 rupees. Simple. Again in the next year, machinery will appear. Machinery 90,000. 90,000. Then less depreciation 10,000, because depreciation remains same. This is what we have learnt in straight line method, 80,000 rupees. Then we are still in the straight line method only. Okay. After this, suppose the third year comes. So in the third year again machinery 80,000 less depreciation 10,000, it will show 70,000. What I want to tell you, please focus. See, in this method what we are doing is we are just charging depreciation every year directly to the machine account. So the machine account becomes from 1 to 90, 90 to 80 and 80 to 70,000. Okay, every year we charge depreciation directly in the machine account and the machine account balance is changing. Now I will tell you another method. See, machinery account was 1 lakh rupees. If I write here, please focus, machinery account 1 lakh rupees, and there is a one more account. If I create a dummy account, say provision for depreciation, I will explain this name, don't worry, less provision for depreciation account is 10,000 and I am saying the amount is 90,000. Simple. Again next year machinery account is 1 lakh less provision for depreciation account. See, provision for depreciation account shows the total balance of all the years. So in the previous year the balance was 10,000. In current year again there will be 10,000 depreciation. So total depreciation will become 20,000. So you can write here, or just for now explanation you can name it depreciation only. See, depreciation, then again machinery account less depreciation. So depreciation till date is 20,000 less 80,000. Then again machinery account 1 lakh rupees less depreciation, that is 30,000 rupees, that will represent 70,000. But sir, there is one problem. Tell me. As soon as I am writing this, now a student tells me, sir, in the previous method also the amounts were 90, 80, 70. In this method also the amounts are 90, 80, 70. Then what is the difference between both the methods? Now please look very carefully. in both the methods, when we look at the balance of machinery account, what do we learn? In the second year of our balance sheet, we are learning that the cost of machinery was 90,000 and we have charged a depreciation of 10,000. But from this balance sheet, what do we learn? We learn that machinery value was 1 lakh rupees and the depreciation till date is 20,000. Sir, why this balance sheet is better? This balance sheet is better because this balance sheet shows us the true balance or the true cost, or you can say the original cost of the machinery, original purchase cost. So that's why this method is more reliable. Why? Understand this. Suppose you are a shareholder of the company and in this third year, you took the financial statements. Okay, when you look at this financial statement, what will you see? That okay, machine was rupees 80,000, depreciation is 10,000, it is representing 70,000. So you will say that I would have purchased machinery for 80,000, so I am charging depreciation. But now if I give you this picture, that machine was 1 lakh and depreciation is 30,000, so you will understand, oh, the original cost of machine was 1 lakh rupees and depreciation is 30,000. It means the machinery is 3 years old. By looking here, you will understand that machinery is only 1 year old, but here you will understand the machinery is 3 year old. So you will understand that okay, might be in future we have to purchase new machinery also. Those things are helpful for the users of financial statement, for the person who are called as shareholders, who are the owners of the company, who uses the financial statement to take the decision. Why? Because this method tells us the original cost of the machinery. The original cost is represented every year in the balance sheet. That's why this method is chosen over this method. Understood? What is the difference? What difference will appear for us in the journal entry? See, very easy. The only difference will be in this method, what we used to write? We used to write depreciation account debit to fixed asset, then P&L account debit to depreciation. Simple. This is what we have written. Now what will change? See, depreciation account debit. It is very easy. We are just breaking this entry into two. Okay, check. Depreciation account debit to accumulated depreciation, because we are accumulating or we are totaling every year whatever is our depreciation. Okay, so you are accumulating the balance of depreciation. That's why it is called as accumulated depreciation. It means you are adding your depreciation every year in one particular year. Depreciation to accumulated depreciation, but in 11th standard we use the name as provision for depreciation. Provision for depreciation. It means that only, which is accumulated depreciation only. Okay, see how they are breaking this entry, depreciation to provision, and then they will write the same thing, provision for depreciation account debit to fixed asset. Please focus and understand. If you see these two entries, if I cut provision and provision here, because credit and debit, so the entry will be depreciation debit to fixed asset, which is this entry only. So the effect will be same, the result will be same, but this method will give you a better picture of what is happening. Understood? And after this, the entry will be same for P&L account, P&L account debit to depreciation. Understood? Only this entry we are breaking into two parts. Now we will write this entry as depreciation account debit to provision for depreciation, then provision for depreciation account debit to fixed asset. then P&L account debit to depreciation. This is the same entry, okay. Now this is your provision for depreciation. Now we'll solve a method that will give us more clarity on this topic. Check. The question says following data is present in the books of Goel brothers, okay. The date is on April 1st 2020. Machine account is representing 8 lakh rupees. Provision for depreciation is already representing 3,20,000, okay. On 1st April 2020 they sold a machine for rupees 2 lakh which was purchased on 1st April 2017, okay, for rupees 3 lakh. Understand this. On 1st April 2017 the cost of the machine was 2 lakh rupees. Sorry, the cost of the machine was 3 lakh and now after 3 years we are selling it for 2 lakh rupees. Prepare machinery account and provision for depreciation account assuming depreciation rate at 10% per annum on straight line method. Just I am telling you, suppose this is 1st April 2017. They are saying we had purchased a machine of 2 lakhs. Sorry, we purchased a machine of 3 lakhs. 2018, 2019 and 2020, 1st April 2020, we sold it for 2 lakhs. They want us to prepare machinery account. See, for this particular machine, we will understand how much is the depreciation for 1, 2, 3 years. Okay, what is the depreciation of all the 3 years? Then we will find the cost. Then we will know whether we have gained on sale or there is a loss on sale. See. They have already told us that straight line method depreciation rate is 10% per annum. Fair enough. Now see. First, we will find the gain or loss on the sale. Understand this. Gain or loss on sale. I am preparing a number line here that will clear the picture. 1/4/2017 I purchased it for 3 lakhs. 1/4/18, 1/4/19 and here it is 1/4/2020. 3 years are completed and now the sale price is 2 lakh rupees, okay. Now I want to know, this was the my cost of my machinery. Cost of machine was 3 lakh, but I want to know the cost of 1, 2 and after 3 years what is the cost on this particular date on 1/4/2020. What is the cost? How will I get to know? I will less depreciation for 3 years. Now you tell me how much will be the depreciation for 3 years? It is 10% per annum. So 10% per annum means how many years completed? 1 year, 2 years, 3 years. So can I say 10% for 1 year? So 30% for 3 years. Very easy. So 30% multiply. What is the cost? 3 lakh. 3 lakh into 30% is 90,000. Remove this. You will have the cost of 2,10,000. Now this 2,10,000 is cost as on 1/4/2020. But this was the cost as on 3 lakh rupees as on 1/4/2017. Now I will compare this cost from the sale price on the same date, because as on 1/4/2020 sale price is 2 lakh, as on 1/4/2020 cost is 2,10,000. okay. So I will write here less cost as on 1/4/2020, that is 2,10,000. Amount will come in negative 10,000. It means it is nothing but loss on sale of machinery. Understood? Now understand one thing. This depreciation we accumulated all these years, so the account prepared will be provision for depreciation account. Now check. Be with me. First I will prepare here machinery account, credit, machinery account debit, and here we will prepare provision for depreciation account. You will write a date, particulars, amount, here also the same thing, and then now if we are preparing the account, opening balance of machine was how much? 8 lakh rupees. So opening balance will come here, 1st April 2020 to balance brought down, amount is 8 lakh rupees. What is the opening balance for provision for depreciation? 3,20,000. So I will write here 1/4/2020 by balance BD 3,20,000. Simple enough. Now understand this. First understand one thing, that whatever was the total block of the asset, what is our total block? Total block is 8 lakh rupees. For this 8 lakh rupees, till date, provision for depreciation, how much has been collected? You will say, sir, 3,20,000 depreciation has been collected till date. Okay. Now what the question is saying, understand this again. Out of the total cost of 8 lakh rupees machinery, there was one machinery, the value for which was 3 lakh. So out of this 8 lakh, there was one machinery of 3 lakhs, which we are selling now. So for that particular machine of 3 lakh, how much is the depreciation in this account? We calculated and it was 90,000. We calculated just now. So understand that 3 lakh forms the part of this machinery and that 90,000 forms the part of this provision for depreciation account. You can understand like this. Suppose we have, say, 4 machineries. The total cost of 4 machineries are 8 lakh rupees. Okay. One of the 4 machines was costing 3 lakh rupees. And now we are selling this particular machinery we are selling. So what will we do? Whatever was the total depreciation till now, we will find out that depreciation. We already found out that was 90,000. What will we do? Out of this 3,20,000, we will remove 90. Out of this 8 lakh, we will remove 3 lakh. Understand how we are doing this? That is what we are learning accounting for. Okay. See, we will write here in the depreciation, provision for depreciation, out of 3,20,000 we will transfer in the asset account to machinery account. How much we have to transfer? Only for that asset which we are selling. So that is 90,000. Okay. On what date we are selling it? On 1/4 only. 1/4/2020 we are selling. So 1/4/2020 by depreciation or provision for depreciation? Provision for depreciation. Provision for depreciation account, that is 90,000. Simple, very easy. Now at what price we sold the machine? You will say, sir, we sold it for 2 lakhs. So by bank, we are writing here selling price, that is 1,20,000. Sorry, 2 lakhs. Was there a gain or loss? There was a loss. So by loss on sale, losses are debited. So by loss on sale, how much? 10,000. We have written here. The dates will be same, 1/4/2020, 1/4/2020. Easy. Now what will we write in the machinery account? See, machinery value was 8 lakh rupees. See, we usually in the provision for depreciation method, when we are using provision for depreciation account, you do not write by depreciation here. In the first 2-3 questions when we learnt, we used to write here directly by depreciation, but in provision for depreciation, we will write that account in machinery whenever the asset is sold. Okay, so you will write here, buy provision for depreciation only for the asset which we have already sold by bank, loss on sale. What is remaining now? You will say, sir, closing balance is remaining. So buy balance carried down. How much? 5 lakh rupees. Because this method teaches us that you will prepare machinery account as of cost method only. See, my cost of purchase was how much? You will say, sir, 8 lakh was the cost of purchase. Okay. I sold the machine worth how much? I sold the machine costing 3 lakh. I sold the machine costing 3 lakh, and the balance what I have right now is 5 lakh rupees. Okay. As soon as I said this, a student tells me, sir, where will the depreciation go? I said, which depreciation? Sir, when you are writing closing balance, you are writing the closing balance for 31st March 21. I said, very good. After that, you will write the total. Yes, I will write the total of 8 lakh. 8 lakh. Very good. Then he told me, then sir, where is the depreciation of every year? What we used to charge in the depreciation? As I have already told you, that depreciation we will not write in asset account, we will write in the provision for depreciation account. See, in provision for depreciation account, you will write here 2 balance carried down, 3,20,000. This one is 3,20,000, and this 90,000 is here. We can find balance carried down, but before that, you will charge depreciation in the provision for depreciation account. So I will write here, on 31st March 21 by depreciation account. Sir, how much depreciation will appear? Now tell me. On 1st April 2020, the balance given in the question is 8 lakh rupees. The cost of the machine is 8 lakh. Out of that, the cost of 3 lakh rupees machine I have already sold. So how much machine I had? Now 5 lakh. Now only on that 5 lakh rupees, or you can say that 5 lakh rupees fixed asset or machine, I have used it for the entire year. So the depreciation will also be charged only for 5 lakhs. So you will write here 5 lakhs multiply 10%. For entire year, this will give you 50,000. And therefore it will become 3,70,000. So you can write in your two balance carried down, 320 plus 5370 minus 90, 2,80,000. Simple. Then you will write the total here, 3,70,000. 3,70,000. This is your total balance. Understand this? You will charge depreciation in provision for depreciation account if you are preparing this account. Okay. And then you will charge from provision for depreciation account, you will put some money in the machinery account only when that machinery or that fixed asset is sold. Understood? Now, after this, we have next concept to learn, that is written down value. Very, very easy. See, what does it say? We have already learned straight line method. Written down value method says just to change the rate of depreciation or the way you are charging the depreciation. See how? The concept is, what have we written here? A, straight line method. B, written down value method. Written down value method also called as diminishing value method, also called as reducing balance method. Okay. Now understand, very easy. See, what have we learnt? The cost of machine is 1 lakh rupees. Depreciation is 10,000. It will become 90,000. Again 90,000 will be my cost. Depreciation is 10,000, 10%, it will become 80,000. Then again 80,000 is my cost. 10,000 is depreciation, it will become 70,000. This is a straight line method when the depreciation is charged every year on the same amount. What is the cost? 1 lakh. So you will charge 10% per annum on straight line method. So on straight line method means every year the depreciation amount will be same, 10,000, 10,000, 10,000. How? Because the cost is 1 lakh, you charge 10% of that, that is 10,000. Every year 10,000 we are charging. What written down value teaches us? See, they tells us that You are not supposed to charge the value on cost. You have to charge the value, you have to charge the depreciation on the value left. It means if my cost of machine is 1 lakh and the depreciation is 10,000, then what is the cost remaining? 90,000. Then they are saying when you are again charging depreciation at 10% now, you will charge on this value, so it will become 9,000 and the value will become 81,000. Understood? Again when you are charging the depreciation at 10%, what will you do? 10% of this 8100. Like this you are supposed to charge, it will become 72,900. Understood? So like this you are supposed to charge the depreciation. See, when you are charging depreciation every year on the same amount, that is called as straight line method. Then if you are charging depreciation at 10% on the cost which is remaining, see this is the written down value, the value which is written down, see from 1 lakh to 90, then 90 to 81. If you are charging your depreciation on that value, it becomes written down value method. Understood? So you can say that the depreciation will fall each and every year. Understand? We will solve a sum which will provide you more clarity now. Check. Remember, in straight line method, depreciation remains same every year, but in written down value method, depreciation will fall each and every year. A firm purchased an old truck for rupees 2,90,000, okay, on 1st April 2019. So we have to prepare the truck account. Credit, debit, date, particulars, amount, date, particulars, amount. Firm purchased truck for 2,90,000, so I can write here to bank account 1st April 2019, 2,90,000. It charged depreciation at 20% per annum following written down value method. Okay, the truck was sold on 1st October 2020. So we have to reach first till 1st October 2020. So the entire 1920 has passed. Then for 20 also 6 months has passed. Only then we are selling the truck. Now understand. And they are saying you have sold it for 1,60,000. So we will compare the cost as on 1st October and the selling price as on 1st October. So first we will complete the accounting for 2019. You will write here 31st March 2020 by depreciation account. How much? See, 2,90,000. How much is the depreciation rate? 20%. So write here 20%. It will become 58,000. So your closing balance will be by balance carried down 290 minus 58. It will become 2,32,000. Simple. Now what will happen? This is your total of 2,90,000 and 2,90,000. Then again you will write the opening balance to balance brought down. This was 31st March 20. This will be 1st April 20. When I sold that, I have sold the truck on 1st October 2020. So I will write here on 1st October 2,32,000. 1st October 2020. First I will charge the depreciation for how many months? I have used the truck for 6 months in the current year. So 2,32,000 multiply 20%. But remember one thing, 20% depreciation is for entire year. We have to charge depreciation for only 6 months. So multiply 6 by 12. Please focus on the calculation. See, this was the opening balance. On this 20% depreciation, then multiply by 6 divided by 12. Understood? Now we can say that depreciation will be how much? 23,200. Simple. Now I am selling that for 1,60,000. 1,60,000. Okay, so now I can easily calculate gain or loss on sale. How? What is my cost? Cost was 2,32,000. Then out of the cost, if I remove 23,200 less depreciation 23,200, then how much is left? 32 minus 23, it will appear 9,000, 8,800, 2,08,800. Now 8, 23, 28, 29, 30, 31. Okay, then sale value is how much? Sale value is 1,60,000. Now this will become my cost here, less cost how much? 208,800. So the loss is 48,800. So I will write here by, you can remove this, by bank also you have to write. Why bank? Because you have received money. How much? 1,60,000. And there is a loss on sale. So you will write here by loss on sale. Please write here account also. I have space constraint, so I am not able to write. Loss on sale how much? 48,800. This is how you are supposed to write this. This is how we charge on written down value method. Okay. The difference comes in the depreciation calculation. Now you can write your total as 2,32,000. 2,32,000. Sir, why there is no balance carried down? Why there is no closing balance? Because we have already sold the truck. Now we do not have truck only. So how we can have the truck account? Understood? So our truck account will be closed. Now, next thing is, last concept we have is asset disposal account. See, understand. Asset disposal means what? We are selling that particular asset. So we are preparing another account just to get all the information about that. Understand how? See, we are just breaking the entries, as we have already learned in provision for depreciation also. We just broke the entries. Okay. Asset disposal also we will be breaking the entry into two. See how? First we will write the notes for written down value, that is depreciation amount will reduce every year. Why? Because we know that depreciation is charged on the opening balance of fixed asset and not on the original cost. Depreciation is not charged on the original cost, it is charged on the opening balance of the fixed asset. Okay. Now third is, if suppose depreciation rate is not given, so depreciation rate, how can you find out? See, rate is equal to R, you can say depreciation rate as R, which is equal to 1 minus root of S by C multiply 100, root is N. Okay. Now what is N here? N is useful life, S is scrap value, and C is the original cost. Now after that you will get the depreciation rate. Okay. Now we have to learn here the new concept, concept 5, asset disposal account. See, first tell me what was the journal entry for the sale of asset. See, you will say, sir, when you are selling the asset, it was bank account debit, then loss on sale account debit, 2 fixed asset account, 2 If there is gain on sale, then you can say gain on sale account. Simple, very easy. Now remember, if there is provision for depreciation also, so what will you write? Provision for depreciation account, debit. Easy enough, very easy. Now see, this was your journal entry. Provision for depreciation account debit, bank account debit, loss on sale account debit, to fixed asset, to gain on sale. Only this will remain your selling entry. But what happens if you are using asset disposal account? So you will create another account first, that is asset disposal, and the entry will be asset disposal account debit to fixed asset. That's it. See, here you were transferring so many things into fixed asset. Provision you were transferring, then bank, then loss on sale, then there was that gain on sale. If one can be there, loss or gain, whatever, everything we were writing to fixed asset account. Here directly one entry, asset disposal to fixed asset, and after that the entry will appear is the same, bank account debit, provision for depreciation account debit, loss on sale account debit, to, now this time here it was to fixed asset account, but here we have already transferred fixed asset to asset disposal. So now we will write here to asset disposal account, asset disposal account. If there is gain, then we will write here to gain on sale. Understood? Very easy. See, if you can observe, there is no difference. Just look very carefully. Okay, see, if I remove asset disposal account debit, asset disposal account credit, now check the entry again. Both the entries are exactly same. This entry is exactly same with this entry. What we are doing? We are just breaking this journal entry into two different parts. Else nothing. Just we are doing everything through asset disposal account. Okay. So I will just remove this. We will solve a question and that will mark the end of our this chapter. Let's see. What does it say? Following is data for Reena Limited. Machinery value is 5 lakh. Provision for depreciation is 1,16,000. Okay. So I can say this is machinery account, debit, credit. Then provision for depreciation account we have to prepare. Provision for depreciation account, credit, debit. Then one more will be there, asset for disposal, or you can write here machine for disposal also. That is machinery disposal account, credit, debit. Date, particulars, amount. Now use this shortcut. You can also use this shortcut. Okay, take the duplicate and copy. Duplicate, and you can copy that. Here, then again duplicate, the same thing. Now, what is the given information? Opening balance of machine is given 5 lakh rupees. So you will write here to balance brought down, that is 5 lakh rupees. Posted into the ledger. Then provision for depreciation 1,16,000. Provision for depreciation by balance brought down 1,16,000. Simple enough, because the opening balance for provision will come on credit side. Then after that, they say depreciation is charged on machine at 20% per annum by diminishing balance method. Okay, sir. A piece of machinery purchased on 1st April 2003 for 1 lakh was sold on 1st October 2005 for 60,000. Okay. Prepare machinery account and provision for depreciation account for the year ending March 2006. First, tell me what was the cost of the machine which we have sold. We purchased a piece of machine for 1 lakh rupees. We purchased for 1 lakh. It means this is the original cost. That original cost we will transfer from machine to machine disposal. Okay. So I will write here machinery account is this. I will write on 1st April. Sorry. We have to prepare account for the year ending March 2006. It means this is 1/4/2005 is opening. Now we sold it on 1st October. 1st October 2005 by machinery disposal. What is the original cost? 1 lakh rupees. Understood what they are saying? Whatever was the original cost in the machinery account now, out of that 5 lakh, 1 lakh rupees was the original cost. That you transfer to the machinery disposal, and whatever entries you have to pass, provision for depreciation, gain on sale, loss on sale, bank money received, whatever, you do all that jhamela in your provision for depreciation account. Okay, do not write anything in the machinery account. We want it crystal clear. So by machinery disposal account, 1 lakh we are transferring. We will go into machinery disposal, and I will write here 1st October 2005 to machinery account. How much? 1 lakh rupees. Now 1 lakh has come here. Now there will be many things appearing here. What all will be there? See, now machinery account is of no use for us. We will focus on provision for depreciation and machinery disposal account. Now understand, I am preparing here the working note. See, for question number 6. Understand, cost as on 1/4/2003 was how much? What is the value given? It was 1 lakh rupees on 1/4/2003, and we sold on 1st October 2005. Depreciation is 20% per annum. So on 1/4/2003 the cost was 1 lakh rupees less depreciation for 1 year. In written down value method, you cannot charge depreciation directly for 2.5 years, 3 years. Okay, you have to charge 1 year by 1 year. So 1 year is 20%, add 20%. So 1 lakh rupees multiply 20%, this will give you 20,000. So cost as on 1/4/2004 will appear 80,000. Simple. Now after 1/4/2004, less depreciation for 1 year, add 20%. So 20% of 80,000 will be 16,000. It will appear to be 64,000. Simple. Now again understand, this is your cost as on 1/4/2005. You can prepare number line also. See, this is your 1/4/2003, then 1/4/2004, then 1/4/2005. Then after 6 months, 31st October, 30th September or 1st October? 1st October. First October 2005. It means only 6 months are there. So now what depreciation you will be charging here? Less depreciation for 6 months at 20%. How? See, 64,000, 20% multiply 6 by 12. Only for 6 months. So it will appear here 6,400. 400. So you can say 64,000 minus 6 will be 58. 57,600 is your cost as on 1st October 2005. Now you can compare this selling price, this cost with the selling price. What is the selling price we have? The selling price was 60,000 rupees. See, the selling price was 60,000. They are selling it for 60,000. What was the cost we have? 57,600. So you can say selling price is 60,000 less cost 57,600, which means it is a gain of 2,400. So you can say gain on sale of asset was 2,400. Now what will we write? We will go in the machinery disposal. First thing, how much is the total depreciation? Now see, total depreciation will be 20,000, this 16,000 and this 6,400. Total of this is 21, 30, 36, 42, 400. So you will write here that you will transfer in your asset disposal account to asset disposal account 42,400. Okay, that will be transferred here by provision for depreciation 42,400. What is the date? Remember, this is your opening balance. This is your 1st October. Everything is happening on 1st October. This is opening balance 1st April 05. You have transferred this much to asset disposal. Now we will complete first asset disposal account. By provision for depreciation 42,400, how much money you have received while selling? By bank, we received 60,000 rupees. Okay, sir. It means, can you tell me how much is my profit? How much profit have I earned? I have earned the profit of, we have already learned, 2,400 rupees is my gain on sale. So I will write here 2 gain on sale. Remember, in asset on disposal, machinery disposal account, the dates will be same for everything because everything is happening on one particular day, right? Gain on sale is 2,400. Therefore, the account will tally 102,400, 102,400. Understood? Now, what is happening in provision for depreciation account? We know that every year we charge depreciation. But when you are preparing provision for depreciation, you will write depreciation in this account only. So 31st March 06 by depreciation account. Now understand one thing. The original cost of depreciation was how much? 5 lakh rupees. Okay. I am preparing a number line here. Please look. On 1/4/2005, the machinery value I had was 5 lakh rupees. Out of this 5 lakh, on 1st October 2005, I have already sold worth 1 lakh rupees machinery. Okay. Now, this 5 lakh rupees I used for the 6 months. Then, for the next 6 months, we had only 4 lakh rupees machine, correct? Understood? And we are also using written down value method. So this 5 lakh after provision for depreciation, which was 1,16,000. See, this was 1,16,000, which is related to this 5 lakh opening balance, obviously, which means the machinery cost was 5 lakh. On this provision for depreciation is 1,16,000. Then we will get the cost of today. On that you will charge the depreciation for the 6 months. See how it is happening. The machinery will be, for the depreciation account you can write here. Where should we prepare? You can write here. The cost was 5 lakh. I am just writing the information here. I do not have space. Less Provision for depreciation, how much was the given in the question? 1,16,000. You can write here 3,84,000. Okay. Now for the 6 months we have entire machinery for 5 lakh. So less depreciation I will calculate at 3,84,000, 20% for the 6 months, 6 by 12. The amount for this is important, and the amount will be, which will be 38,400. Now understand this. The value was here 5 lakh minus 1,16,000. The value was 3,84,000. This 3,84,000 I used for 6 months. For using 6 months, the depreciation was 38,400. So now on 1st October, what is happening? They are saying that this 5 lakh cost will become 4 lakh. Why? See, we are just removing the information of the asset which we have sold. The cost of asset we had was 5 lakh. Out of that cost, 1 lakh costing asset is we are selling. So on 1st October, how much cost of asset we still have? 4 lakh. Now provision for depreciation, how much we had? 1,16,000. But out of that 1,16,000, we are transferring in asset disposal 42,400. See, it is not only 1,16,000. By depreciation for the asset we have already sold, I am writing here, which is for the asset sold. How much for the asset sold for this current year? It was 6,400. See, it will be 6,400. This is the current year's depreciation. So this is the current year's depreciation only for the asset which we have sold, that we are writing. So understand like this, that the provision for depreciation had a balance of 1,16,000 totally. Then for current year depreciation only for that asset which we are selling, that we added and we transferred that into asset disposal account. Only that portion what we are selling. Okay. The current year's depreciation for the unsold asset we are still supposed to write here. We will write here. Okay. Now understand this, that 5 lakh was there, it will become 1 lakh. Asset provision for depreciation was 1,16,000. I will write here 1,16,000 plus 6,400 for current year minus 42,400. This will give me 80,000 rupees of accumulated depreciation or provision for depreciation. So I will write here minus 80,000. That will give me 3,20,000. So now the cost is 3,20,000. Now that 3,20,000 we used it another for 6 months. So what will be the depreciation? 3,20,000 multiply 20%, multiply 6 by 12. That will give me 32,000. Very easy. Now understand, the total depreciation should be how much? 32,000 and 38,400. But this is the total depreciation. Out of the total depreciation, we have already charged here 6,400 for the asset we have sold. So here you will write by depreciation 38,400 plus 32,000, which is a total depreciation, minus 6,400. That will give you 60,000. This is how we are supposed to write this depreciation. Okay, I will give you a detailed writing here. Just we will complete this answer. We will write here 1 lakh, total will be 1,86,000. Here also 1,86,000, and to asset disposal you can write here 1,44,000 as your to balance carried down as of 31st March 2006. The explanation is little lengthy. You can write here 31st March 2006 by balance carried down, that is 4 lakh, and you can write the total as 5 lakh, 5 lakh. Then writing here to balance brought down as 4 lakhs on 1st April 2006. Okay, I will give you a detailed writing. I am writing here this as, see how we can calculate for question number 6. Check.